Understanding market structure, key levels to anticipate a reversal. This is very crucial in trading. It's going to help you know areas to anticipate for a reversal, areas to use as take profit positions, areas for solid stop loss zones. If you watched the previous video that I made yesterday, this key level, I outlined this key level. Price was expanding to the upside. We had this daily impulsive candle right here, which was literally at this key level. And in that video, I was talking about how this key level could potentially act as a potential resistance to send price to the downside into the extreme levels. And right here, as you can see very nicely, price mitigated that position. Why is this position a key level to watch? The reason is because we have this low and a high, and then right here, this was the last impulse move to the upside before dropping to break this significant daily low. Now, overall, I'm still bullish on NAS100. Overall, I still remain bullish. I still want to see price to continue to the upside. But in the meantime, on the intraday levels, I've always talked about the intraday levels, price being bearish, consistently creating lower highs and lower lows until we came here and broke this high. But what did we mitigate after breaking above this high? We mitigated this key level, which was the last impulse move before a drop to break a significant structure. This is a significant swing low on the 4-hour time frame, significant daily low as well. But let's say we wipe everything on our chart and let's go to the 1 month time frame. Looking at the 1 month time frame, I still remain bullish, and all I'm looking for is an opportunity to buy. Now, we look at the 3 month time frame. I still remain bullish, and all I'm looking for is an opportunity to buy. So despite the fact that the daily time frame is bearish, 4-hour is bearish, let's look at weekly. Weekly is bullish. We have a low, we have a high, price coming down. All I'm looking for is an opportunity to buy to continue higher, because if we use that Fibonacci from the overall low to the overall high, you can see we're currently at a discount zone. So if this key level doesn't serve as a support zone to take us higher, this key level right here will be my next draw on liquidity. So I'm watching here very closely. If it doesn't work, here will be the next key level. But if here works, my next draw on liquidity is going to be this inefficiency. And so far, as you can see, price came to the downside right here after we came to the downside on the 4-hour time frame. Right here, I talked about this key level in the previous video. If you watched it, I said this would be a potential area to anticipate for support, and if it fails, then I won't be surprised to see a run and sell side liquidity. So personally, I'm still watching this key level very closely, despite the fact that price has been showing significant move to the downside. I really don't like to allow the impulses that price is using to come to a certain point of interest. I don't allow that to change my bias. I still remain bullish. And if this key level fails and will run this low, then all that means is that the next key level that I'm going to be watching will be this position. So if this holds, if this key level holds, then I'm anticipating for a run on buy side liquidities resting right here. Buy side liquidity resting right here. Low resistance liquidity resting right here. So these are going to be my targets. First target, second target. So take note, we do have non-farm payroll coming out today. We do have non-farm payroll coming out today. So really pay close attention to price action. Anything can happen. Price could literally drop off the cliff from after the news drops. Price could literally drop off inside here, or price could literally expand to run these highs. Any one of them can happen tomorrow. So trade with good risk management. If you don't know what you're doing, it's best to just stay on the sidelines and don't put your risk on the table, because anything can happen and you can get wiped out in days like this. So I'll be watching this very closely. As you can see, I've already outlined the key levels. I'm watching a high, a low. I'm watching to see whether price will break above this high and then see what it's going to do. Whether it's going to break above it, retest and continue higher, or whether it will break, run liquidity and continue lower. We're just going to see what the market is going to do. But overall, going from the monthly, I still remain very bullish on NAS100, and I'm still anticipating for continuation to the upside. I'm only looking for opportunities to buy it. I'm not looking for opportunities to sell it, despite the fact that yesterday I outlined this key level and I said this would be a potential area for resistance. If I wanted to sell from it, I'll show you how I would have sold from it. What I'll do is I go to 1 hour time frame. I want to see an inefficiency, and right there you can see an inefficiency on the 1 hour. Price coming in here, I'll be looking for 5-minute shift on market structure, and right here we go to the 5 minutes time frame, and as you can see on the 5 minutes time frame, we created a low here, and that low, I'll make this red, and that low, you can see a low, a high, we created a low, broke structure. After breaking that structure, this right here was the last major impulse move to the upside before this drop. Or I can even use, okay, if you look closely, you can see we had this move to the upside before dropping to break that structure. So I can literally use that entire key level as an accumulation zone for sales. So each time price come in there, I'll look for a potential sell. And my stop loss is going to be the overall high right here. Adding an extra 1 or 2 pips above it just for spread. And right here, this is going to be my entry, and my stop loss is going to be a few pips above here. And I'll target the key level I outlined in the previous video, which is this key level. I'll target the inefficiency there, and right there, that's a 1:4.26 risk to reward ratio. So if you watched that video and you saw me outline this key level, you could have literally used that to look for a potential sell and sell it into this inefficiency right here, and that will be a 1:4.26 risk to reward ratio. So there is what I'm watching. I'll be watching this key level to see whether we're going to see a reversal from there. If not, then the next key level to watch out for would be right here. So that is my analysis. If you do have any questions, feel free to drop it in the chat. If you do have any recommendations of any asset class you want me to look at in the next video, feel free to drop it in the comment section as well. I'll speak to you in the next video.